The energy sector was the best performing sector on all of Wall Street last year, ladies and gentlemen. The Dow Jones Oil and Gas Index was up an eye-popping 56% on the year. This year, not so much, actually. Dow Jones Oil and Gas Index is down 3.5%, but we have the best in the business that's joining us today. Welcome, everyone, to Buy, Hold, Sell. I am your trader, Todd Schoenberger, and I am joined by my friend and co-host, Tobin Smith, out in sunny and hot Scottsdale, Arizona. But Toby, you look kind of cold today. I tell you, I don't understand.
I'm freezing my ass off here. If it gets below 50 degrees, there's like a winter chill warning, and it's like 47 outside. So,
oh my goodness, we'll put that parka on. Well, Listen, we have a very special guest from Bloomberg. We have senior oil and gas analyst Fernando Valle, who is joining us. And Fernando, I got to go right to you on this one. We woke today on Monday, being February 27th, and we hear the news about Russia cutting supplies to Poland. I figured if that was a green light to go long on oil, there wasn't. What else would there be? But yet we saw the market up a little bit today with stocks, but we saw the oil was down about 70 basis points today. What gives?
Well, I think the economy for one, and then the big question is the China reopening all that it's cracked up to be, or is it going to be more of a dud than anything else? And Toby's cold out there in Arizona, but overall, it's been a very mild winter in the northern hemisphere, and that really took a lot of the bullishness away from both oil and natural gas. Just as a reminder, the Northeast uses a lot of oil for not just heat but also power generation, and because we really haven't needed to dip into those resources, it's been a lot less of a impactful winter than we expected.
Hey, Fernando,
so Toby,
down into some of your Twitter tweets. One that caught my eye was something I got yesterday too. Was Devon Energy coming out and saying, "Hey, all of a sudden, it's pretty expensive to drill this stuff, and at $2, ish MMT, we're going to cut back." What's your call on this? Because that's a big issue.
Well, yeah, that's a great point. I think our call has been that the inventory is just not there for a lot of the shale players. And you've seen, for example, with Devon being a great example, just how much natural gas they produced versus oil from the Permian, which is supposed to be an oil-heavy play.
Right.
And that really impacts their profitability. It's not just that Henry Hub is down, but Waha, which is where they actually sell their natural gas, is down even further. At points back in 2019, it was negative because there isn't enough pipeline capacity to get that gas to consuming centers. And when we look forward, there's a lot of investment in the Permian, rightfully so, but there's also a huge amount of natural gas coming out because a lot of these producers are going further and further out. And as you step away, you produce more gas. The core is also aging, so you also produce more gas than you do in the early years. Right. So that needs more pipeline. Yeah. And that will decrease the returns for most of those producers out there that don't have pipeline access.
Well, what's interesting is obviously, in the Marcellus, I call them the natural gas COVIDians. They haven't quite figured out that they have the largest gas field in the world, and they won't build a pipeline. That's not the problem, in Texas to Arizona to California. That pipeline just broke down, right? And so all of a sudden California was stuck. But we've been big investors in infrastructure for natural gas. USA Compressors is one of our big home runs in the last couple of years. Nobody quite realizes that none of this stuff moves without that 10,000 horsepower compressor. And
definitely not in New York.
Go ahead.
Definitely not in New York. If you think about how power prices have been in New York and in New England, and again, that was part of our call earlier, last year really, that diesel was going to blow out because you can't get new pipelines through New York. And that's leading power to go exponentially higher in New England, especially in times that renewables don't produce. Yeah. And let's be honest, solar in Massachusetts, it doesn't really move the needle that much, especially in the winter. Have
you ever been to Boston in the winter? Oh my God.
Exactly. And if
I
you
mean,
can't get
Todd's in
natural gas from
Buffalo.
there,
They're going to start installing solar in like 2065, I think. I don't know.
We haven't seen the sun in months.
Yeah, right. Yeah, I know. And you have a fake tan, which I don't understand. But Fernando, the second question I have for you is, you've talked about the, North Africa. All of a sudden, North Africa is now the biggest exporter of oil and natural LNG. Really? Aren't they just getting it from Russia, repackaging it and sending it out again?
yeah, that certainly happens in the Middle East as well, where they have large refineries and crude oil, and they blend and they then re-export that out to different markets. And it's been a year now of the Ukraine invasion, and early on, there were already movements on the crude side where you could, the Middle Eastern countries could buy Russian crude, refine it, and then it was no longer Russian crude. It was Saudi gasoline, Saudi diesel, and that no longer had an effect on sanctions. So that's been a prevalent issue. It just raises the cost to the Western side of the equation. It does reduce revenues for Russia, and anyone that tells you that it doesn't is lying, because anyone who's ever bought, we were talking about Argentina, who's ever been to a place that has price controls, it does create parallel markets, and the cost to insure is higher, the cost to move is higher. So you get a deeper discount, but it's not zero, which is ultimately the objective of the sanctions.
Well, we've been long every crude tanker and every clean product tanker stock available, simply because, my business, we call it Transformity Research, and we try to focus on secular transformations that create supply-demand imbalances. OMG, take 500 tankers off of the market and put them into the Russian fleet or the shadow fleet, and then some of these these delivery paths are now 1,000 kilometers farther or 2,000 kilometers, and our rates for tankers literally doubled and then doubled again. These guys don't know what to do with the cash, because the LNG manufacturing has taken all the space at the shipyards. They're maybe getting a few they ordered a couple of years ago, but how long do you think that demand supply imbalance is going to be with product, and then product tankers, for crying out loud? I mean, they're printing money.
Well, if you look at shipping stocks, and this is really me venturing to a former life where I did transportation finance.
Oh, did you? Okay.
From 2008 until, I would say 2018, 2019, it was a really dire time to be a ship owner. Everything but ultra deep water rigs, it was really painful.
Right.
And the pricing there in 2008 took a haircut of 50 to 70%, depending on what type of vessel you owned. And so I
call that a really shitty market here. That's how, that's how scientific.
I'm still learning English. That word's not in my vocabulary.
Merda. Okay, merda.
They'll pass muster. But I guess the point is, you're correct, Tobin. And I think that the biggest risk there is really just the economy again. As you said, the shipyards have been constrained everywhere for a really long time. The capacity came off in that period. They all at first turned into drilling rig manufacturers, and then obviously in 2015 that went away. So it's a very boom bust industry, and I think right now you have tailwinds. And you talk about LNG, but just think about Boston used to import cargoes from essentially Russia every year, and now those cargoes have to be exported and re-exported in order to get into Boston because of sanctions. And then, of course, we have to bring a lot more natural gas through LNG to Europe as they close out the pipeline. So, talking about tailwinds in the sector, that seems to be certainly an interesting one.
All right, so let's talk net gas prices. WTF?
Yeah.
I mean,
when are we?
Go ahead, Fernando.
There's a floor in. Is Freeport LNG shipping going to change anything? Give us the inside scoop, brother.
Well, I think winter's nearly over.
Yeah,
we're going to get some cold, and so it's really going to move now with just overall economic demand, and then Freeport, as you mentioned, coming back on. Is the floor there? I mean, you're talking about law of small numbers now when it gets to the two. So it's hard to say, is it going to be two or is it going to be 180? But
right.
You know,
The law of small
the,
numbers. I forgot that. That's
yeah.
that's a good way to say it. God, it went down 10%. Well, that was 10 cents. Okay.
Exactly. But I think overall, when we look forward, we tend to be constructive on the environment because, as we said, there is the acreage out in the shale world is not as good as was once believed.
Mm-hmm.
I mean, we keep missing estimates on the oil side. And yes, at first that means we're producing more natural gas. But then as you saw with the Baker Hughes rig report last week, we're also starting to drill less. And of course, natural gas producers, as you said, in the Marcellus, they need more pipelines. And the issue that we have is not that we can't produce enough natural gas, is that we can't move it to the right places.
Yeah.
And so bases are going to be wildly different. And again, I mentioned New England because Boston Harbor natural gas is significantly higher than Henry Hub. So you'll have all these dislocations in bases where you can arbitrage those differences. And then just as you go towards more renewables that are intermittent, you're going to need gas. It's just going to change how we use the peakers.
Yeah, I mean, the base load issue obviously doesn't go away. There's an anecdote. I have a investment or wealth client up in Connecticut, and she sent me a text and says, "Am I dreaming? My gas price, bill went up, to $350 for my 1,400 square foot house in Connecticut. It used to be $100." And she called into their system, and actually Arizona, so they have some wholesale deals up there, and now her bill is $125 because she's getting her energy from her natural gas from a wholesaler in Arizona. Now, is Connecticut the only one doing that? And I've seen that in Europe, I've seen that in other places, but what do we tell people whose gas bills? Of course, now they're coming down, so maybe it's too late.
Well, we're telling them we're going to get rid of your gas stoves and your gas heating and go to electricity,
Right.
which of
Yes,
course
we are.
is going to be generated by natural gas too.
Right.
Toby, that's a New York thing. You may not have heard that yet.
Okay. Well, I'm from California originally, and California's the one who said, when you build a new building today, we're not going to put a natural gas pipe into your building. And then when they go and they can't get electricity for 5 days, they say, we may have been hasty on that. And
Well, I saw a bumper sticker driving around New York. It said gas stoves are evil. So, you talk about the finger pointing. But listen, guys, let's leave this block right here because I do want to, Fernando is going to stay with us going into the next block. And we do have some very specific questions, particularly about this talk coming out of the White House about maybe pulling some of our SPR, some of the reserves out of the SPR. If that's the case, what can we expect for oil prices in the short term? So please stick with us here on Buy, Hold, Sell. We'll be right back after the break.
Buy, Hold, Sell Live, brought to you by Transformity Research.
Hi, everyone. I'm Veronica Dudo, and welcome to Buy,
Hold, Sell. If you have the Russians that are going into Ukraine, the Americans and the Germans and everyone else in Europe is going to say, hell no.
If Russia doing things, logically was their MO, I'd agree with you. Yeah, Todd, why don't you get him on a phone call right now? Hello, you.
Welcome back to Buy, Hold, Sell. Today is Monday, February 27th. We saw the Dow Jones Industrial Average up just a little bit, but we actually saw oil drop. And we have the best in the business with us, Fernando Valle, Senior Oil and Gas Analyst at Bloomberg. And on Bloomberg, if you are a terminal member, you will be able to look up Fernando's articles. He had a great article today, and we're going to get into that a little bit. But Fernando, one quick question for you. There is some talk right now coming out of the White House that we might be tapping into our SPR. You would expect that we would see gas prices drop, but they haven't budged at all, actually. Actually, they've been kind of creeping higher, according to AAA. do you expect gas prices to maybe decrease over the next couple of months until we get into that peak driving season?
Yeah, I think we're going to see. There's a conjecture point where we switch. In the winter you make a certain kind of gasoline, and then it switches into summer grade, and we're just about at that point. And so the refiners and the midstream companies are going to burn through that inventory so they can make space for the new summer components. That tends to happen around this time, early March. And then we also get refineries coming out of maintenance, which should increase utilization. One of the big issues that's holding up oil prices right now is margins are elevated because we aren't getting a lot of supply from refineries. And the last part is the oil price and how it goes there. And I think there's still a lot of expectations that China will lead to higher demand. If that tends to ease, then we'll certainly see a drop in oil prices. Simple math, but WTI is $75, so 10% move in WTI is $7.50 a barrel. A margin on gasoline is only $22, so a 10% move there is only $2 a barrel. So it's a lot more significant to have a move in the oil price than on the refining margin per se.
That is a great point. I'm going to shift quickly to your Petrobras. We dipped into it when it crashed, and we got our, I don't know what, I think our cost basis is $8 on the preferred, and we've already gotten $8 in dividends. I mean, it seems like, so help me, are they just battling it out every day for who's in control and what dividend? Because the Brazilian government can't live without their freaking 62% of that dividend, right?
They shouldn't, but with the new government, they'll certainly try. Yeah. And I think they'll have a really hard time justifying that kind of dividend to their base, at least in the short term. And they'll try to find other ways. So the way they've used Petrobras in the past is as the center of investments, building refineries, building ethanol plants, buying power plants. And so if I had to to guess, that's where I think they would probably go next. And they've talked about building refineries. I think that's an awful idea. Brazil spent $40 billion on 5 refineries, and they built half of one. So it didn't really do much for the country. So I would hope that they would instead focus on the pre-salt, because that is by far the best resource outside of the Permian in the world right now.
Yeah. And tell our listeners about the pre-salt. I was down there a few years ago out on a rig, and these guys were working 24/7, 7 days a week, making some serious cash, and they're nowhere to spend it. They go online and they start gambling, because that was the only thing they could do with their $150,000 a year equivalent deals. But the pre-salt is how many years or how many decades? Have you ever even got close to it?
So the discoveries were originally made in 2005, and it was one of the fastest developments in offshore ever. And when I first started in oil and gas, they were supposed to produce 15,000 barrels a day per well. And they average over 30 for most wells. And they actually had a well right now producing 47,000 barrels a day, which is insane. It's just a great rates.
Don't they call that a gusher? Isn't it scientific name?
Yes, gushers. It's all gushers all around. And the best part has been that the decline has been much lower than expected. They were supposed to be 10% per annum. The first main field, 2P, the decline was closer to 3 to 4%. There was some mitigation, but very, very low declines. And that's brought the cost again. The cost was supposed to be at first $20 a barrel to extract, just on lifting costs. So the cost just to remove it, and eventually, and now it's closer to, in some fields, 3.5.
But 3.5 is the number I saw recently, which is mind blowing. When you can then send it to your refinery and mark that up and ship that out at high prices, while the local guys or have price controls. I mean, I don't know, $78 billion of dividends in 2 years has to be a record.
Yeah, I mean, they certainly turned the ship around. If you remember, in 2015, they were the most indebted company in the world. Yeah. And they've done that on the back of paying back an insane amount of debt. and they sold a lot of assets. They no longer are in the ethanol business. They've significantly decreased their exposure to fuel retail and to distribution in general. And they've really been trying to focus on the oil and gas production side. But there's some thoughts that they should be more involved, and it should be an arm of the government rather than a private company.
So bottom line, the show's called Buy, Sell, Hold. So
Buy, hold, sell.
Oh,
Buy,
that's
hold,
right. I
sell.
always get it mixed up. I've only done 500 of these shows. What do we do with PBR, Fernando?
Well, I'm going to have to cop out because I'm not allowed to give recommendations.
Oh, I apologize. Okay.
But I'll say that it's definitely a stock that has a company that has one of the most attractive asset bases, and the main concerns there are really about the governance and their capital allocation, because the resource itself, they're in an envious position that they have really low cost production and resources to grow for a long time.
Well, we're also long, one of the Guyana players, smaller players, et cetera, because they have the same, salt type stuff. It's amazing. I would have studied geology more if I knew that I was going to be, making all this money on that energy. But I'm married to a petroleum geologist, so I've learned some just via chatting.
Always the most optimistic person in the room.
Yeah, no question. No question. No question. All right, what else, Toddy?
Well, this is great. Well, I got to say, Fernando, I mean, your articles are very popular on the Bloomberg terminal. We always recommend the entire audience to check them out. If you are a Bloomberg member, you definitely want to subscribe to Fernando's thoughts on the oil and gas industry, because he's definitely the best of the best that's out there right now. So, Fernando, we really want to thank you for joining us today on Buy, Hold, Sell. This was sensational. We know the audience will be able to look you up and be able to obviously we'll be posting some other information, some other quotes from your articles as well. So this was great. So
don't forget, Todd.
Yeah,
hashtag
go ahead.
OOTT.
OOTT. What's it stand for?
Fernando knows. I don't know.
It's the Organization of Oil Trading Tweets.
That is for the audience. That is inside baseball stuff. That's big time knowledge. You're not going to get that anywhere. You're not going to get that on any of these financial channels, except for here. So that's fantastic. So listen, on behalf of Fernando Valle and Tobin Smith, I am Todd Schoenberger. Thank you again for joining us today on Buy, Hold, Sell. We'll catch you next time. Take care.
Buy, Hold, Sell, brought to you by CrossCheck Management.
Hi, everyone. I'm Veronica Dudo, and welcome to Buy,
Hold, Sell. If you have the Russians that are going into Ukraine, the Americans and the Germans and everyone else in Europe is going to say, hell no.
If Russia doing things, logically was their MO, I'd agree with you. Yeah, Todd, why don't you get him on a phone call right now? Hello.
Financial News TV, just the way you like it. Fast-paced, unadulterated, in-your-face, rock and roll style. Join us next time on Buy, Hold, Sell Live.
Oh, yeah, I'm going to remember all that. I can't even remember.
Oh, God.
Yeah, I want you to, oh, my God. Fast pace, sorry.
Take one.
Fast pace, no holds barred, in your face, rock and roll style.
Woohoo! Let's kick some ass.
I want you to smash that like button.
Track, cue, dissolve.
Good morning and welcome
from Bigwig Studios.
From the Bigwig Media Studio.
Bigwig Media's broadcast center at the Willard is the ideal headquarters to host your virtual meetings and video conferences.
Kudos to our team who's running around behind the cameras.
What I liked about working with Bigwig Media was you guys are the experts.
Our industry pros have you covered. Let's get started.